Hello, welcome back to the channel. It's been a little while since I made a video, so I thought what's better than to give you guys an update on the US dollar. We just had NFP and unemployment, so I'm going to go through that and I'm going to tell you my expectations for the US dollar. So if we have a look here on this calendar, we see that we had quite a lot of US news, but there's only three. We've also got average hourly earnings, but we're going to focus on two, which is unemployment and NFP. So you can see here, non-farm payrolls, we came out at 256, so 256,000. This was a 1.29% deviation. Previous was 212. Forecast was 160. So I think it's safe to say that we really blew this number out of the water. Now, just to preface this forecast, I've actually seen this a little bit higher on other sources. So for example, if you went to Forex Factory, I think it was forecast at 200,000, which is why we didn't see a huge impact on the markets. We did still see bullish movements, of course, but it wasn't like a shock reaction. It wasn't like a 500 pip move or anything crazy. So if we have a look, again, we had a very positive number here. We can see the historical data for NFP is looking overall not great, but we're going to go into this a little bit more shortly using a slightly different platform. But when we move over to unemployment, this is also a very nice indicator to tell us how the US labor market is going. So we can see actual came out at 4.1, forecast was 4.2, previous was 4.2. So this looks like a great decline. Well, not a huge decline, but it looks like a good decline again for a solid labor market. However, if we go over to the Edge Finder just to zoom into these the data points a little bit more, what we can see on unemployment rate is a little bit of stagnation, if you will, not stagflation, stagnation. So we've got, back in September it was 4.2. Then in October, 4.1, November, 4.1 again, then December, 4.2, January, 4.1. Now, we're not seeing a huge decline in unemployment. We are seeing it relatively stable. It's fluctuating within this 4.1 and this 4.2 zone, or these four data points. So to me, that indicates that we are stable. We're not massively increasing. We're not massively decreasing. We are happy or stable within this area. So let's move over to NFP. So NFP, we've very clearly got, we're on a rise, we can say. So we had 254K in October. In November, this says 12K because that was the initial release. However, it was revised in the next NFP to 36K. So it went from 36K up to 227K. Or actually, this one was revised to 212, but either way, still a nice increase from 36. Then we had yesterday an increase to 256K. So we are seeing NFP start to come up, which is non-farm payrolls. So what does this tell us? Again, it tells us that the labor market is going quite well. And if we have a look now at unemployment claims, this is on a decrease. We can see 220K. Then we've got 219, 211, 201. So we are looking very stable. So what does this tell us? How can we capitalize on this information? What do we do? Well, of course, this leads us looking towards the dollar. So if you guys watch my content regularly, you will know that this 110 level has been on my mind since 107. I've been calling it, I've been saying if we can break and we can hold 107, 110 is the next level that we're going to go to. Again, this is due to the really good US data that we're getting overall. Slow down on rate cuts, possibly a hold, well, very likely to have a hold this month in January. So it's looking positive. So let's have a look at the 3-month chart. So if we have a look here, what do we have? Well, a very simple bullish trend or channel, whatever you want to call it, it's fine. Now, again, technicals are a little bit subjective, so it depends where you want to draw this from. So you could have said, it's back in 2008, back in 2009, 2011, but either way, it's been established for many years. So if we can draw this, you can just get an idea of how simple this channel looks. So what do we do from here? Well, if we're saying that the US labor market's looking good, we're slowing down rate cuts, possibly, well, very likely having a hold now in January, we can say the dollar is going to continue its bullish run. So now I'm looking towards the next zone. Where are the next major levels within the dollar index? Well, I see this. This is the 112 level, which is obviously these previous highs back from 2022. So that's where I'm targeting. That's the next technical level. Beyond that, we could see this channel acts as a very typical standard channel where we see price come up even higher, test the top, and then maybe that's when we'll have a little bit of a larger pullback. However, obviously to gauge a pullback like this on a 3-month chart, we'll obviously have to monitor the economics, see what's going on. We're going to have to see what Trump's going to do. There's lots of things going on that you always need to monitor as the markets are moving, obviously to stay up to date and make sure your targets are still targets and not just memories. So that's essentially it for the dollar itself. But then what do we do regarding the dollar crosses? Well, I am still on my horse, whatever you want to call it. I'm still on my track to be shorting euro dollar down to parity. And to be honest, the way things are going, I'm actually looking now towards below parity around the 0.98 to 0.97. And the reason is not likely that we will come down to 1.0 and will completely reverse the trend. That's just very, very unlikely to happen. So what I would imagine to happen here is, because parity is such a key level within the market, I don't mean just technically, I mean it's a significant level, because obviously that means 1 euro is the same equivalent value to 1 US dollar. So we will likely see some sort of interest off the 1.0 level. However, I wouldn't again expect this to be a change of trend. I would be looking for a continuation to the further downside, so towards these next levels of support. And again, we do need to account for what data is coming in as we are going in for these short positions, because things can change. For example, if Trump comes in and managed to completely rectify the Russia-Ukraine situation, we very likely will see the euro benefit quite a lot from that. So again, keeping an eye on what's coming into the market, not just what's already happened to the market. Remember, efficient market theory, I think it was called, which basically means the market is where it should be. It's already priced in, everything's efficiently priced. So euro dollar shorts are still on the table. As for dollar yen, this is the last pair I'm going to cover because it's the only other thing I really want to talk about until my my Sunday watch list video. But dollar yen is tricky in my book, because if we look at the yen index here, it's very clearly heading to the downside. We don't have much buying interest at all if we're just looking on the technical side. We did see a small pullback here, but overall we are following this very strong downwards momentum. So if we look on the dollar index, we don't want to go against that. We want to ride this continued dollar strength that we're seeing. We want to sell this yen weakness. So of course, really, following the technical, or the core factor of trading, which is, buy strong, sell weak, we would want to buy the US dollar, the US dollar against the Japanese yen. However, when we are taking into account the factors of the yen, well, what is at risk at the moment? I'm going to give you a second. Well, what is at risk is a Ministry of Finance, so an MOF intervention on the yen. And that is essentially when they pump money into the yen to slow down the depreciation. It's not necessarily to change the trend of the yen, because that's not really possible with an intervention. But it's, so for example, when we are seeing this downside move, we might see an intervention just to rocket ship the yen temporarily, just to slow this down. So instead of being just straight down, we do see some upside movement, hence the slowdown of the depreciation rather than the change of trend. We can see that here. This was when we had the the flash crash, if you will, and this was the sort of intervention level that we first had, which was just above 160 on this dollar yen. So it's something we need to pay attention to. If you are long dollar yen, be very cautious of these levels up here, sort of towards the previous high. Now again, what you need to also be aware of is the MOF seem to extend their threshold over and over. So before we had this initial intervention, we had warning signs. We had 145, I think there was 150, 155, then it came 160, and then we finally had this really strong downside move. So be very cautious. It might not be, in fact, it's very unlikely to be at 160 on the dot. We might come up to 164, 165, 166, and then we see something happen. But yeah, and again, we can't gauge when this is. We can't gauge how much of an impact this will have on the market. It could just be a couple of pips, or it could be something much more significant. So for example, let's just take here, for example, again, I'm not sure if this actually was an intervention, but let's just hypothetically say it was. It could be a 2.4% move, or we could get something else that's a bit more crazy, like a 10 to 13% downside on dollar yen. We don't know really. So that's the thing about trading dollar yen. With that uncertainty, I'm not touching dollar yen. I'm not touching any of the yen pairs. I'm just sat waiting really to see what happens, benefiting from the dollar bullishness on dollar crosses. So pound dollar, euro dollar. That's basically it. And New Zealand dollar is also a great one to be in as well. So guys, that is it for me, or it from me. I hope you have a great weekend. Like and subscribe if you want to join the Discord, get some signals, education. Feel free to click the link. We've got a 7-day free trial, so you don't have to spend a penny until you know that you like it, which I'm sure you will. Guys, see you very, very soon. Thank you for joining me as always.